Good afternoon, everyone. Super excited to have you all here. Future of P&C Underwriting, presented by Unqork. I'll start with the introduction. I'm CK, head of insurance here at Unqork. Been with Unqork a little over 3 years. Excited to kind of partner here with many of my partners in the ecosystem. So I'll start with you.
Sure. Hi, everyone. I'm actually not Nigel Walsh. I'm Steve Dowling. I am responsible for our go-to-market strategy here at Google Cloud. So I'm looking forward to our conversation.
Hi, everybody. Jeff Heine, not Sherry Scott. So just to clear that up. So Chief Revenue Officer with BetterView. Spent about 20 years in the space around underwriting and claims and looking to share insights.
Hello, everyone. Kanisha Agarwal. I'm a core and emerging technology leader in Deloitte. Have been working across different core technologies and low-code, no-code in the insurance space for the last 15 years.
Hey, everyone. Adam Gaddis. I am principal with Deloitte Consulting. I sit at the intersection of insurance and emerging technology. And I serve clients in terms of digital transformation, building enterprise resilience. Looking forward to the conversation and excited to partner with Unqork on a lot of our work together in the market.
I'm Max Drucker. I'm one of the co-founders and CEO of Carpe Data. We are a next generation data company specifically for insurance, leveraging emerging alternative data.
Hi, everyone. Cam Talishi, partner with McKinsey & Company, where I co-lead analytics for our insurance practice in North America. Spend most of my time in the P&C space on topics related to underwriting, pricing, product. Glad to be here and look forward to the discussion.
Excellent. So we're excited to bring a large panel here for a great discussion. The topic is Future of P&C Underwriting, right? But before we kind of even get into that, if you think about the current state of affairs, right, and just if you look at macroeconomics, right, insurance are facing a whole host of macroeconomic challenges, right, that are potentially likely to maybe EBIT growth, maybe profitability, rising inflation, a lot of these challenges. So maybe, Cam, I'll start with you. How are carriers and industry stakeholders kind of preparing themselves for the next 12 to 15 months? And what is the likely impact you see, like particularly in the P&C underwriting space?
Yeah, so as you mentioned, we're in a very uncertain macroeconomic environment, which certainly will have direct consequences on P&C carriers to the extent that the industry essentially ensures economic activity. So one topic that is top of mind for everyone is inflation, impact that it's going to have on loss costs. Some of my colleagues recently published an article estimating something to the tune of $30 billion of additional loss costs in excess of historical loss trends in some of the core P&C lines. So it's certainly going to have an impact on profitability. We'll talk more about over the course of this discussion of what can carriers do to enhance their responsiveness, particularly pricing agility, identification of trends early on. The other thing is the outlook on recession or the prospects of recession to the extent that the policy actions that Fed and central banks are going to take to tame inflation it might lead to recession, in which case you'll likely see a drag on demand, which is going to be a challenge for carriers that are looking to grow. Also, in some lines, you're going to see some impact on profitability, given the nature of exposure shifting. The other trend that I would like to call out, and again, hopefully we'll talk more about it over the course of the discussion, is climate change. I think we are truly at an inflection point when it comes to climate change. On the one hand, everybody, I think, recognizes the impact that it's having on physical risks. You'll see increases in likelihood of events like wildfires and hurricanes, which obviously directly impact P&C carriers. But I think there's also, on the other hand, there's a significant opportunity. We sort of expect and anticipate one of the largest reallocations of capital, likely in our lifetime, something to the tune of $9 trillion of investments on decarbonization. Insurance industry has to play a role in ensuring all the nascent industries, technologies that are going to be developed as a result of this. But there's also clearly a challenge because you don't actually have the historical experience and data to be able to underwrite and price this. So these are some of the trends that we're seeing, and I think some of the topics that are top of mind for carriers right now.
Got it. Adam, what would you add? Like, how are you seeing the macroeconomic impact
I mean, I agree with all the a lot of the trends that my colleague Cam mentioned. One thing I'd like to add, I think given the inflation situation, there's definitely going to be a lot of pressure on profitable growth. So we've enjoyed significant growth as an industry over the last 4 years, but now given the cost pressure, there's going to be a lot of focus on profitable growth, not just growth. If you look at the administrative costs today, for every $1 of premium for all P&C insurance, about 35% goes to transactional cost. That definitely cannot sustain in the new future. So how do we mitigate that? Investments in technology, automation, reducing cost in general in order to be nimble and survive this market is going to be extremely critical. The other piece that every single conversation we're having with our clients today involves talent. There is definitely shortage of skilled talent across the board, and this is not just in insurance, it's across every single industry that we deal with. So looking at insurance as a platform for change, and not just change from a technology perspective, but change from social, truly impactful for all what our new talent looks for in today's environment and what we believe in as a society is going to be extremely impactful for a lot of our P&C clients as well.
Steve, Cam talked about climate change. Adam talked about social talent challenges. How are you seeing some of these macro factors impact your conversations and your business with insurance carriers?
Sure. So I think over the last year, you've seen a real shift from innovation to operational efficiency. So you think about inflation over 8% right now. It's really thinking through how can we run more efficiently and automate some of the manual stuff that you do today. So that has been a key trend that we've seen is one from a loss ratio. How can we mitigate risk before it happens? So leveraging AI, ML capabilities. And then from an expense standpoint, it's really thinking through, all right, how can I run more efficiently? How can I automate many of the things that I do today? So that really covers macroeconomic. From a climate standpoint, you no longer have the 30 years of loss history when it comes to weather. It's constantly changing, it's evolving. So it's really thinking through how can I leverage real-time data to really understand the market, understand what's happening with the weather patterns, climate, how can I prevent risk in the future? And I think it's something that we'll really need to focus on coming up over the next couple of years.
Got it. So shifting gears a bit, right? Technology, right, plays a big role in underwriting, right? So at Unqork, right, we are enhancing carriers' ability to do underwriting in a more efficient way, accelerate speed to market, bring in new products, new risk classes very rapidly to the market, improve customer experience, right? And in all that, also bringing a whole host of technology partners, ecosystem to our carrier customers. Kanisha, as you look at technology and software development, and as it pertains to underwriting what changes are you seeing from a traditional, say, approach of system by system, application by application, function by function transformation versus the changes you may be seeing now?
Sure, CK. So I think a lot has not changed when you talk about technology transformation system by system or function by function. But what we are really seeing in the market is a laser focus on business outcome and how we are enabling that through technology like AI, data, right? And having an ecosystem modernization play. That's what we are seeing in the market. So it is not just about a function or an app. It's about enabling using all our tech partners.
So you mentioned data and AI. I want to come to you, Jeff, right? How are you at Betterview helping your clients modernize underwriting?
Yeah, for sure. It's an important topic for us all. So really moving more to a proactive model from a reactive model. We may have heard repair versus replace, and now to predict and prevent. So we actually take the predictive insights we have and place them all throughout the policyholder lifecycle. So it's at the point of quoting, underwriting, loss control, and making sure that that's actually used to engage the policyholder and the agent at a more precise level. And I think the other part too is, one of the biggest struggles we've seen even post-pandemic is getting boots on the ground, as they call them, for inspections. We're very focused on property risk and generally going past the window of discovery for the carrier and pretty much what they can do. So we're able to use our technology to pretty much help make sure that they have eyes on each and every property risk, whether it's new business or renewal. And so that's just a couple of the elements we're working on.
Max, how about at Carpe Data?
So to talk about the theme we've been discussing about labor, even before the pandemic, the insurers are dealing with an aging workforce, underwriters, claims professionals, et cetera, and it's been hard to hire those roles. And so the trend, the theme, clearly is about automation. And so we certainly see that, and it's about sort of the way we look at it is we saw auto insurance as effectively a fully automated product. And what made that possible was the data. It was the automated credit score, it was the automated motor vehicle report, it was the automated loss history. And so what we're doing and what we look at other companies seeming to do is what are those critical data elements that will unlock that automation for other lines, like small commercial, for example, and of course, throughout the claims process, right? Having greater consistency, having greater compliance, but ultimately the operational efficiency, especially with the trends of inflation, are critical for a carrier to succeed.
So I think both Jeff and Max, you both talked about data, right? So data and analytics, right? So we've seen P&C carriers and a lot of the industry stakeholders investing heavily into data, right? Both McKinsey and Deloitte Research have proved out that companies or carriers with most advanced data and analytical capabilities have better operating results and performance. Steve, I want to start with you. At Google Cloud, how are you enabling P&C insurers to leverage massive quantity of data, customer data, and then how are you breaking that from data to insights?
Sure. So as you think about it, we really manufacture nothing but data. So what's important is really thinking through how can we access that data, how can we leverage it and make more business outcomes and understand what decisions we can make. So with the impetus of the cloud, it really helps you shift away from the shackled data that you might have in a mainframe system or legacy antiquated system that you're not able to access and have that ability to really get it in real time. And so that really opens up your first-party data that you have internally, but also enriching it with some of the third-party data that you have. And with the cloud, what that really does is it creates that agility and flexibility to make real-time decisions because historically insurance has been relatively slow. So how can we think through how being more proactive and being able to make some of those more informed decisions in the future?
Jeff, I like the tagline you have, which is turn underwriters into insurance heroes with predictive analytics. How are you helping clients achieve that?
Yeah, I think part of the key is, from an underwriting standpoint, making sure we breed transparency. So any of the issues you see on a property, having those conversations with agents and sometimes the policyholders, what makes them heroes is the bond up with they create with their agents and the policyholders. It's a completely transparent experience. So we have several customers doing that and growing, and it just bonds them. So the hero part is their loss ratio with the insights we provide generally go down significantly, but the relationships are stronger. And if you look at a non-renew rate, it's less than 2%, which gives you a really good idea of what you can actually do with the type of insights we provide and the market can provide.
Solving the biggest problems facing insurance carriers today. Carpe Data. That's your big pitch.
Absolutely.
How is that becoming real with the carriers that you work with?
Well, I mean, the opportunities in many ways are just so obvious, right? Because the scale is so big. So it doesn't necessarily take a tremendous amount to really be able to move the needle, to have a big impact. And it's important, and what we try to do internally is it's not about the incremental improvement, right? And when we talk about automation, it's not about we want to improve the underwriter or the claims professional by 10 or 20%, right? That's great, and everybody would love that. But really, you're looking to have a step change, and you're really looking to how do I remove this process, and how can I then obviously get the consistency and benefits of doing that? And it does seem like the push towards automation goes in waves, but again, back to the labor shortage and the given challenges, nobody is thinking about how can I hire a new army of underwriters, right? That's no carrier is ever going to say that, and the impact that can be driven by using data and Unqork as a great workflow platform, right, to be able to automate those processes is I mean, it's profound.
One thing that keeps coming up, right, when you think about data and analytics and P&C underwriting is dynamic pricing, right? It's not a new topic. It's something that the industry has been pushing the envelope across the various segments and lines of business, right? For example, like Amazon changes a price like 2.5 million times a day, right? That's kind of the statistic that we hear a lot. Cam, how are you seeing dynamic pricing play across lines of business, right? Do you see data and analytics kind of redefine what that benchmark is?
Yeah, so in standard bit of P&C lines, you of course have the regulatory constraint, right? The carriers, the frequency and the nature of the pricing changes that can affect its constraint. However, we talked earlier about inflation and the point around how do you identify trends faster? How do you, for example, develop indications faster? And how do you actually, take your pricing action in the market? A lot of carriers that we talked to, and recently especially, I think the inflation has exposed a lot of weaknesses in internal processes, exposed a lot of challenges in some of the data foundations that they have. So if you can't get intra-monthly claims data, loss data, it's hard for you to actually develop trends at that time scale. So I think there's certainly an imperative for both looking at your data foundations, your processes, to try to get to insights faster and try to get to market faster in terms of your pricing changes. I think the other point I would make here is that, and this is true across lines, there's more and more data out there, third-party data, there's more data products out there. Obviously, a lot of carriers look at this, so whether or not it's in personal lines or in small commercial, for pricing and other use cases. But I think there is perhaps a paradigm shift in how you go about, on an ongoing basis, in a way that is streamlined, look at multiple data products at a time with a hypothesis of what's going to actually generate value for you, what's going to provide predictive lift to your models, and really make a playbook that is streamlined. Because this is one of the topics that touches multiple functions. You need procurement folks involved, you need product folks involved. In commercial lines, you also ideally want to have some underwriters involved in terms of their hypotheses on what data is going to provide predictive power. But a lot of times, this is a very fragmented process. You look at carriers looking at one data product at a time, as opposed to saying we have an aspiration of looking at 10 data products, 20 data products in a given quarter, and all the little steps in the process that go into it. Because usually, bringing the data, testing it, seeing things like hit rate, match rate, et cetera, independent of use case, you don't need to repeat and replicate that. But sometimes, because it's a very fragmented process, different parts of the organizations don't talk to each other. It tends to be a long cycle time. But this is important, particularly in personal lines, in commercial, where you have a lot of competition. You want to maintain an edge over your competitors. Any sort of further segmentation that you can get from additional data is going to be meaningful. So I think that's a bit of what we're seeing, which is how do you actually do this in a much more streamlined way, and how do you do this on a consistent basis over time?
Adam, what are the top 2 or 3 questions clients have for you on the topic of dynamic pricing?
I think one of the key areas, and this is, I think, a point that both Cam and my colleague here touched upon, it's really not about like a one-time transformation. Like, here's an AI data model, let me go implement it. What's the right product? How do I, deploy it to market effectively? It's really like building a system and a culture, and then transform, like rinse and repeat. And there's something that I read the other day. A lot of our clients say like, oh, okay, we just implemented this new AI model. Am I done? And the answer is, to your point about regulation, what's the opposite of AI? It's IA, which is internal audit. That's the main. There's a lot of, it prohibits progress by, looking at that one model without building a system or a culture that would, enhance that change. So in terms of what our clients asked about, I mean, regulation is definitely top priority. What can you do? Regulations by state. The other one is, what's a broader strategy for, my dynamic pricing? We know definitely, profitability is key, but how do you embed that within an organization to the point about building cross-functional teams to make that effective and deploy it to market, efficiently to capitalize on, the impact of what dynamic pricing would provide you. The other one is also around like platforms. At the end of the day, we're dealing with massive amounts of data. There's disparate systems. How do you connect those systems together to get really the intelligence that you need to come up with an effective strategy?
Well, and I'd say, I might add, that really the idea of assessing risk, assessing data at a single point in time is really an antiquated concept, right? And that's just how the industry and the world has historically always worked. But we now live in a world where data is constant, data is fluid, data is continuous, and there's tremendous opportunity to be able to leverage that, both, again, across the claim cycle, across the underwriting cycle, across the life of a policy. And while we may have policy contracts over time, but this should be evolving.
Well said.
I like the analogy you use, which is internal audit. So Steve, for you, right, you have very different types of data sources, right? Google Maps, Waze, and then a whole host of other products. How are you navigating this challenge of internal audit, PII, business information, as you help your clients?
Well, I think we need to be careful there just in terms of what data we can actually provide. So a lot of it is just really understanding what data is actually available that we can bring to our clients, but also really focused on some of the third-party data providers that we can partner with that have that governance and regulation in place where we're able to share that data. And so we've partnered with a number of different data suppliers to be able to ultimately bring that data to our customers, and then it's a very rigid process in terms of what we can do and what we cannot do within Google in terms of data. It's an area that we just need to be careful about.
Shifting gears a bit, right? Changing customer experience. Customer preferences and habits are changing rapidly. There's better information available on improved customer segmentation. Faster go-to-market strategies are becoming a key to differentiation. Kanisha, I'll start with you. How has business and customer view of underwriting and insurance services changed?
Sure. So I think from an underwriting standpoint, what our customers are looking for is a change in a thought process from the carriers and the underwriters' perspective, right? We all spoke about data, we spoke about AI, right? But how are we applying that? Our customers are not looking for underwriters to be operating in hindsight. Rather, they are looking for underwriters to be operating in foresight, right? So with all the real-time data that are being fed, how is that getting into rating, right? So that perspective of empowering the underwriters and our carriers is what is expected from our customers. And also with that, the underwriters can be much, much more highly skilled, as I think Max or Cam mentioned, where they can be a technology trailblazer, or they can be a data person, or they can be a portfolio optimizer, right? So it's not just doing underwriting. There's a lot that is expected of them in these days, and it's not about just replacing them, it's about empowering them.
Yeah. At Unqork, right, a lot of our clients, come with a problem statement, but also continue to tell us about their customer segmentation and how they're different, and the implication for the technology they need to have, right? Whether it's personal lines, whether it's commercial lines, and commercial is a small commercial or mid-market or large commercial. Max, are you seeing your clients taking a different approach as we think about customer segments, right? Be it small, mid, or large commercial, or even between personal and commercial?
Well, if we were at this conference 5 years ago or 6 years ago when it started, we'd be sitting on a panel talking about the disruption from self-driving cars, right? Here we are 6 years later, right? We haven't quite seen that. That said, obviously there is going to be someday some disruption of that, and carriers obviously are moving into other areas, especially the ones that are heavy in auto, into areas like small commercial and splitting it up. Well, also you see a lot, and this is, I think, largely because the data is now possible, is that you can get to micro businesses. You can insure personal trainers, you can insure photographers, things like that. It's now doable because there are companies like Carpe Data where you can find information on those small providers, whereas historically, they're working from a credit score, there's no good information to automate around or any have consistency around. So absolutely, a trend towards having way more segmentation and way more variety in small commercial is for sure happening. I think another trend that we will also eventually see are specific products around a given business, nail salon insurance, restaurant insurance, right? We still are this world of what you have comp and you have your BOP and you have all these given areas. It's not so simple, right? You still have all these given lines. I think it'll be very exciting when there is more product innovation, and it's a lot more simple for that business owner to just go and get a good, better, best for their insurance, and that's it.
Max, you talked about the various segments, small commercial. Jeff, from your perspective, right, at Betterview, can you give us specific examples of companies you've helped and how have they differed from a customer experience perspective?
Yeah, so I think let's start with commercial lines and middle market. There's greater transparency we're bringing. They're actually sitting down with their agents and actually working through the risks in that way. And so what they've been able to do from an efficiency and automation standpoint with the shortage of folks is actually cull down exactly those risks they need to sit down with and go through that. And it's probably the same for large account. You're going to see small commercial operate a lot more like personal lines with that fluidity of data and the availability, and more importantly, the insights. It's not just about hazard. It's about vulnerability, the actual susceptibility of those risks. They can actually price and do that more dynamically, and we'll call headless in that way. And we're even seeing so much more of what we see as the vulnerability about we're focused on property risk, sharing that with consumers and making them part of the actual risk management process, which is a little bit of a sneak peek on my prediction. That's something we're going to continue to see in terms of the industry and that segmentation across what you typically see in commercial lines to personal lines.
Got it. Technology ecosystem, right? I heard a lot of you talk about it across these various points you made. We are at ITC. If you think about it, this is the ecosystem, right? So many different stakeholders, partners, technologies, SIs, carriers, all kind of coming together. Kanisha, how are you seeing the technology ecosystem drive greater nimbleness, scalability, right, or optionality for carriers?
You added all of that into it, CK. So from a technology perspective, I think carriers are definitely shifting away from a one-stop shop package solution, right? What we are seeing in the market is the entire concept of microservices and API first, right? It is the center of all. It gives you better digitization operations. It gives you higher amount of scalability on cloud. And more importantly, it gives you the piece that you mentioned about optionality to our vendors, to our carriers actually, by the different vendors, right? And what we are seeing in the market is it's not about getting one product or one entire thing which is best in everything, but rather picking and choosing each vendor who is best of the breed in that particular space. Whether you start from submission intake, or you go to rating, or you go to post-production transactions, or even of course, for data and customer segmentation. So that's the change or the shift that we are seeing. And I think that is the entire premise on which, at least in Deloitte, we are focusing a lot on our converged prosperity products, where it is about optionality for our vendors and carriers.
Steve, you talked about partnerships that you're building, right, in the data ecosystem, the tech ecosystem. What's the strategy, or are there one or two themes that you think describes the partnerships you're bringing together?
Sure. So, I think an ecosystem is critical. And Kanisha mentioned it before, just in terms of really focused on business outcomes. So as we have conversations, it's not just about technology. We need to be able to think through how we can solve a problem or find a new opportunity. So I think about Unqork, for instance, where that has been a great partnership for us in terms of taking our products and services and then seeing where we can complement it with what Unqork offers. So we've worked very closely with you all in terms of how we can build out new solutions for customers, one being around an underwriting workbench, where you can significantly automate that submission to quote to bind process, really leveraging both of our technologies. So again, I think the key point is, one, how can we focus on those business outcomes? And number two, where can we complement our solutions with different vendors within the ecosystem?
Adam, anything you would add here?
Yeah, I like what both of Kanisha and gentlemen said about, like, at the end of the day, curating ecosystems that provide solutions is really the key to successful strategy. It's not about point solutions. It's about what can we do to bring a platform together. And at the end of the day, it's about supply and demand and make sure you're addressing both efficiently.
Cam, so McKinsey believes that underwriters in the future will be portfolio managers, right? Empowered by AI, digital, operating like hedge fund managers, increased scale, insights, leverage. How does one get started?
Yeah, so this is really a comment about the outlook on commercial underwriting in more complex segments, let's say mid-market or large core. I think to the points that were made earlier, small commercial is getting largely automated. You're going to see that trend continue. So this is really in more complex segments of commercial lines where you need some level of judgment, at least for the foreseeable future. So take mid-market as a concrete example. It's a segment where you often find generalist population of underwriters that have to write risk across a multitude of industry classes and lines of business. They're not specialized. And typically they think about risk in very different ways, right? So there's lack of consistency in how two different underwriters think about the same risk. We often do this exercise with some clients where we give the same submission to a handful of underwriters and ask them to underwrite it. Both what they look for as they analyze exposures and look at information, but also the outcomes that they come with. Should I write this policy or not? How do I structure it? And what premium should I charge? You tend to see a huge dispersion. So there's a lack of inherent consistency in how underwriters think about stuff. So one idea that sort of, even now is we see traction is, how do you, as an institution, try to capture your institutional view for a given type of risk, let's say a restaurant risk or contractor, across lines? What is it that matters as an institution that we want our underwriters to look at and make sure that they prosecute those factors? And then embed this within the workflow. There's a lot of workflow tools that are now available that allow you to actually, in a dynamic way, right? So this is not a matter of a checklist that you as an underwriter, you're writing a restaurant risk, here's 100 things you need to go look at, but really embedding it in a dynamic workflow that sort of guides the underwriter through the thought process, brings to bear data at relevant points in time. To the point earlier, there's a lot of third-party data, external data, or internal historical data that you have that you want to present to the underwriter, even though they still have to exercise their judgment. And as a result, you get, a lot more consistency in outcomes. You make sure that the underwriters are looking at the right things. By the way, this is not to constrain them, so they can actually still exercise judgment, overrule, right, consider other factors. You collect a lot more information from that, and that actually, you create a virtuous cycle because you can go back and say, as an institution, we thought this subclass, right, or within this segment, we thought new ventures, for example, were bad risk, but we're now finding that a subset of new ventures are actually not a bad risk, right? So you actually can evolve your institutional view of what is a good risk versus a bad risk. And with this, you actually give a lot more leverage to the underwriters. So over time, I think to the point that was made earlier, you have a talent shortage that will continue to sort of persist. They can manage larger books of business more effectively. As an institution, you have a lot more transparency into what's happening, what they're doing, how they're making decisions. It's a different shift, it's a shift in the quality paradigm that you as an underwriter wrote a policy 6 months ago. I have a manager go review it and give you some feedback. You actually see what decisions they're making, where they're deviating from the things that you think matter. And over time, they're just going to be able to do much more, right? So, I mean, the analogy, the portfolio manager, hedge fund analogy, just to say, you can manage larger books of business with more insights and hopefully with better outcomes.
Max, what's the guidance you give your clients on how to get started on underwriting excellence?
I mean, you know, it varies obviously pretty wildly depending on what data they're currently using, how manual are their given processes. I mean, I think most carriers are still looking at most things manually, right? And everybody talks about the flow business, and often the how much they're flowing through it can be, you know, somewhat exaggerated or ambitious. So it really comes down to, you know, what are those areas that are so important, right? That they have data they can now have confidence. So, for example, something like, is there a swimming pool in that apartment building, right? Well, there isn't a data set, or there hasn't been, of a data set of all apartment buildings and do they have pools or not, right? That data set doesn't really exist. So, but now we do live in a world here where this data is out there, and companies like us leverage that data, and then that carrier can now have that confidence to automate that decision. And so that makes a big difference, and that's across the spectrum on what are the area to start is really the knockout questions, right? Those things that are so important, so they're not wasting time, right? One of the great travesties, anybody that's ever tried to do commercial insurance online, there's 17,000 questions, right? And one of those questions at the very end may be, is there a pool here or not? And that's a knockout question, and everybody's wasted all this time, right? So it's obviously flipping it on the other side, figuring out what those are, and being able to automate around that. I mean, it's kind of a no-brainer, and it's super exciting. The other side, though, which is also an area that I think everybody, what I love about insurance companies is that they are the original predictors of outcomes, right? They've been predicting life and mortality for literally hundreds of years, so they're always looking at new data. And so I think the rating factors of the future are super exciting. Things like the reputation of a business, things like the customer ratings of a business, things about the online presence of those business that tell us a lot about what can happen, and being able to select and segment and price around these new factors that are predictive of insurance outcomes is a super, super, super exciting time.
To you, Steve, from your perspective, right, as you interact with your clients, what kind of questions you get asked around, hey, how do I get started here?
Yeah, I mean, it's a very thoughtful process as you think about it. I think where we start is within Doodle, we always think about 10x. So how can we get to a very innovative end goal? But the part that's so critical about it is really thinking through that roadmap and that journey on how to get there. So I think we need to be very thoughtful with how we think about, all right, what does the future look like for you? But then be very tactical in terms of, all right, what are each of those iterative steps that we have to take to help you get there?
So Max mentioned about autonomous cars, right, and the predictions that were being made 5 years ago, and where we are today with that. Jeff, if you were to kind of pick one such prediction or area and how it's panned out, what would that be?
What's coming? Yeah, I would say that, and to give a bit of a preview, is, you know, we think about climate change and more folks being vulnerable and at risk, and the expectations that consumers and businesses have for engagement. It's going to be the dynamic engagement of the policyholder. There's a real opportunity when we start to talk about data, and the quality of that is bringing them into part of the process. And I think you're going to see, not only generationally, but given the shifts and what's actually happening, they actually want that. So you're going to see a lot more policyholder engagement from a personal and a commercial lines. And that's actually going to hopefully make the data better, everything flow better. And it's not just at the point of bind, it's not just at the point of claims, it's throughout that entire policy's life cycle. So when you actually have the opportunity to leverage from a technical perspective, that's what I see coming up over the next 5 to 10 years.
Yeah, and just to add what Jeff mentioned, also not just including the end clients, but also like the field agents, right? The entire value chain and the people involved, I think that involvement will be much, much more is what we see for the next 3 to 4 years, because as each one of them is gaining more skills, getting more data. It can be applied in so many various ways, which is going to see a rapid change in how culture and talent of our carriers are also changing.
Should we get some questions from the audience? Any questions for our panel here? Yeah.
To what extent do you use the consumer themselves in various ways to find out exactly what they're looking for? Maybe they don't even know what they're looking for, but as insurance professionals, you go through that process where you engage those folks directly and then see how accurate that is compared to the data that you collect.
So maybe I can take that
Yeah.
one. So I think that's a very relevant question. And what we are seeing is that we spend a lot of time in understanding, where I was talking about business focus before, right? What is it that the pain point is, right? What are the areas across the entire ecosystem that the business is struggling with, right? And then tying that back to enabling it through technology is what is a differentiator. So spending that time up front is a game changer. And I can see so many people in the audience who I have, or we all have worked personally with and with Unqork, where this has been one of the key factors for our implementation successes.
Max, anything you would add?
I think it's a really fun and exciting time because of access to the new forms of data. And also talk about industry trends as well. The other theme we're really seeing a lot is BI severity, right? So inflation is obviously a factor in that, but it's also the social inflation that comes from attorneys, and it's about attacking this problem across the doctors, the attorneys, understanding, I mean, from our perspective, bringing you data on these sources of information, because, you know, obviously we look at the results from insurers this year, right? BI severity is a very, very big problem that needs to be attacked.
Yeah. Sure.
So where are we in the maturity of using social media data to inform both rate plans and even kind of account-specific schedule rating decisions?
Well, on the small commercial side, right, there are a number of carriers that are working on filing products around this data, not just for selection purposes, but also for pricing. So that's really here. So I can tell you that a Yelp score isn't necessarily predictive of anything, but when you, in aggregate, normalize across the spectrum in a given segment, we can tell you that a contractor with, call it, terrible reviews is twice as likely to have a loss as a contractor that has great reviews within 12 months, right? We can tell you that, you can see that, and it's a no-brainer, right? And it's the social data, again, speaking to small commercial, it's not necessarily causal, right? But it can be a very effective proxy for how well that business is run, right? I get asked questions all the time. Well, my brother-in-law opened this restaurant and he had all of his friends write reviews, and you know, and my response is, it's probably actually a good risk, right? Because insurer's not looking to predict where you should have dinner tonight, right? The insurer is looking to who's going to have a loss or not. And if that brother-in-law cares enough about that business that he hired some firm to, you know, goose up his results or have his friends do it or whatever else, he's probably doing all the other right things too to make that business be successful. So the data, I mean, again, it's intuitive, it's obvious, it's there, and there's no question in my mind and probably everybody else's that the data won't be ubiquitous in 5 years, right? But it's slow, right? But you won't be able to sell small commercial without looking at the online presence of that business and being able to automate around that. Just like you can't sell auto insurance in a state that allows credit, right? It's adverse selection. This data is very predictive.
If I may add, Max, I think you also just look at the underwriter behavior, right? Underwriters, when they get a submission, they go Google it, they go look at pictures, they go on Yelp, they look at reviews, and the hypothesis is exactly what you said. Like, is this business run well, right? and you look for things. So, and then in aggregate, then you use data to prove out that those hypotheses are correct, right? But you can actually talk to the underwriters and say, what is it that you look for? And oftentimes they actually go do their own research on this.
Any additional question?
Question here, I think to Adam. So you guys mentioned a couple of times the ecosystem play. So how do you advise your clients on that? So you have, on this panel, you have Unqork, you have GCP, you have currently they have a lot of different technologies, which for some clients may be confusing. It's like to put them together. So what's your advice in this case?
Yeah, there's really a number of scenarios. It all depends on like the business outcome that we started with in the beginning. There's definitely different strategies in terms of what clients look for and what's like at the end of the day what's good for them and what's in alignment with their strategy and what they're looking for. So it's really about curating an ecosystem that aligns with one, maybe their technology and architecture strategy. The other one is, maybe different sources of data that they have and the integration priorities that they, want to have in their ecosystem. The other one also, we talked about outcomes specifically. We know that Unqork is great at, digitizing workflow, and it fits very well with, a lot of our clients that want their business users to digitize so their goal is to enable, maybe business users to digitize solution. That's perfect for Unqork. Maybe it's not a fit for something else. So there's definitely a selection criteria, of course, that takes into consideration pros and cons. And at the end of the day, it's all about outcomes and alignment with, culture and internal and, strategy, both technology and business.
The one thing I actually have a question on is all of us talked about data, sources of data, increasing sources of data. And so there is this challenge of potentially overwhelmed by data. How is that paradigm moving from data to insight? And how quickly is that happening?
I mean, in terms of how quickly, it all depends at the end of the day, right? It's more, do you have the right processes and structure within your organization to curate the data that you need to, whether it's underwriting or, to achieve the outcome that you're trying to get to? And the other piece that we constantly work with our clients on, that this is truly a transform, rinse, and repeat. It's not a one-time AI model. Let me deploy a pod or a squad of really intelligent data scientists and then the problem's solved. It's really about experimenting, being agile, getting the right information. Maybe it's sometimes you pick the wrong data and you get a different outcome that you're anticipating, and you go back to the the drawing board and say, this is not the data that I need, and I need to go somewhere else. So there's definitely a lot of agility and trial and error as well in order to get to the outcome that you need to get to.
Maybe just one comment to add. I think there's also the point around what are the specific use cases, because when we talk about underwriting, you can take the more broader view of underwriting and say, all the way from the time the submissions come in, whether or not it's in the small commercial context where you have a triage question of, is this STP or does this need to be referred to an underwriter? What exactly do you look at? Or in the segments like mid-market where you want to make sure the underwriters are focusing on the right submissions. There's a question of how do you actually use additional data that may not be contained in the submission to make that decision, and you create models on submission prioritization, et cetera. Or even on renewals, right? I mean, most, you have a segmentation of your renewals, which ones you need to have some level of underwriting versus the other stuff that you auto-renew effectively. There's probably a lot of information to glean from, how did the nature of exposures change over the course of the policy, right? And therefore, there's some reason for an underwriter or somebody to actually look at that. So I think there's also that aspect of it, which is, right, there's a lot of data available. The uses of it may be very different, and so you have to think about that dimension as well.
Jeff, you
Yeah, I
wanted
just
to
wanted to make a comment on that point too. It's at the individual risk level, there's a lot of insights that folks can use, but actually figuring out which ones to look at, that's where I see insights being applied more. And you blend together the fact that there's a shortage of resources, it's becoming even more critical. So that actually, to basically triage, which has been something since I've started in the industry, that's been a real challenge, that I'm seeing a ton of progress. And that insight alone actually makes sure you have the right eyeballs on the right risk, depending upon the use case.
Excellent. All right, so to wrap up, what is one thing you want the audience here to walk away with? Steve, I'll start with you.
Sure. So, I mean, we've talked a lot about data today. So it's really thinking through how I can leverage data and going into the economic environment that we're in now where premiums continue to increase. That's just going to widen that protection gap. So I think from a carrier standpoint, it's really thinking through those use cases, but also new innovative solutions that we can come in and use that instantaneous data to come in. So it might be parametric or embedded insurance or even micro insurance, where as long as we can understand how we leverage that data and really reduce that customer acquisition cost, we can go into different innovative solutions.
Jeff?
Yeah, I think it's a similar theme to what I've commented previously, but it's don't miss this opportunity to engage the consumers or the businesses throughout the entire policy lifecycle. They've never been more ready, and I think we have a lot more of that insight that they could actually help leverage.
Kanisha?
I think it's moving away from just replacing and repairing and moving towards the predictability that we spoke about and prevent the repercussions of that, whether it is people or process or technology or looking at the macro and then how you are using those macro trends to apply to the specific use cases that Cam mentioned about.
Adam?
One thing, I mean, aside from hiring Deloitte, I'm joking.
Nice try.
Digitizing the middleman to me is definitely key. And like any time you take a physical asset and you digitize it, you get more data to the point earlier to be able to make informed decisions. So definitely about digitization in general.
And I mean, just to say on the theme here, it's the future of P&C underwriting, right? Well, there's great data out there now that both enables more automation and is predictive of loss outcomes. And that's the trend that we're going. That's the future.
Cam?
I'll come back to climate change, and I think it's just an open question and challenge, I think, for commercial carriers, which is how do we ensure these nascent technologies that are going to get developed, right? And there's investment dollars that are going in absence of lost data, historical lost data. Is it partnerships that are new, partnerships with capital providers, asset owners, developers that are actually delivering these technologies so you actually learn? Is it doing a different sort of arrangements on risk transfer instead of underwriting individual risks, doing it on a portfolio basis? But what does it actually take for the industry to get comfortable with these risks sooner, as opposed to the typical process of you might need to wait and slowly look at 10 years of data and ultimately open your appetite? But what does it actually take for us to be able to support this transition?
Fantastic. I would like to thank the audience for your time today, and also the panelists. We at Unqork were super excited to host this panel. Thank you again for your time today. Thank you.